Testing 1 2 1 2. Good evening. Good evening. Good evening, traders.
Yeah, good evening, brother.
Hey, how's everybody doing?
It's very, very fine. How about you?
No, all well, all well. Thank you. Guys, if you can just confirm that you can hear me, I'm just getting everybody else in the meantime. Is the audio nice and clear?
Yeah, I can hear you.
Okay, okay. Great stuff. Great stuff. Um, let's give it 2 minutes. Let's give it 2 minutes and then we'll start shortly. So it's 6:39 on my side. Let's say 6:42. We'll officially start.
All right, all right.
Okay, I think we can start, traders. Welcome, welcome once again. I trust you had a good weekend. You're all rested for yet another episode of Popcorn and Savannah. So that's what we must coin them. Now, tell me. Let's start with the usual. Let's start with the usual questions, if any, or comments. What's going on out there? Questions, fellow trainers? Are there any questions regarding what we have covered so far? There was to an assignment. Remember the assignment? Was it done? Yeah, but Nishapaga bomb. Quiet. Two. Hmm. Ah, this one work. Or is it me? Maybe my audio is not. Let me make sure. Testing. Can you hear me?
Yeah, I can hear you. Can
Ah,
hear
so
you.
you can hear
Can
me.
hear you.
So
Yeah,
they
yes,
just don't
yes.
want to answer me. Oh,
Yes, yes.
I see. I see. Guys, any clarity seeking questions or comments? Oh, yeah.
Yes. First I was following the trade plan you sent it. Maybe it's Friday.
Oh, yes. Oh,
The
yes. Oh, yes.
USD and gold.
GBP USD.
Yes. And so far it's going according and gold, yes.
Okay. The
What
line
I
is
wanted to
taking
know.
there. Did you say so far those trades are going well?
Yes, yes, according to the plan.
Okay. All right. No, that's great feedback. We're printing money. We're printing money.
Yeah, so what I wanted to know is what kind of trade do you suggest? Like is swing, day trade, or scalping?
Okay, that's a good question. I'll say what I've said very early on at the start of our sessions, that I'm not going to try and mold you into being a particular type of trader, or to trade in a particular way. Um, how can I put it? All trading styles are relevant, right? And they suit you should engage just a trading style that suits your character, I think, number one, and your risk appetite, right? Let me make an
Okay.
example. For example, if you're scalping, you're targeting short term, you're targeting short ranges. Maybe you're targeting, I don't know, 30 pips, could be 50 pips, right? Um, so you can imagine, if you've got a small account, uh, that using the lowest lot size, especially if you trade, let's say, currencies. I think if you trade indices, it's a little different. Uh, but if you trade in currencies, your gains are rather small. So what I've noticed with scalping is you then have to commit much more in terms of risk, right? In terms of capital, so that your returns are, I would say, exponential to a sense, right? But now
Okay.
it's a double-edged sword. So you have to manage your risk very carefully as a scalper. Your entry and your exit and your stop loss. In other words, you need to pay much more attention to detail, right? Um, and of course, like I said, you have to use much more risk. So if you use much more risk, that means your stop loss becomes even much more tighter, right? Because of course, when you increase your lot size, so does your risk. Um, it widens as well. So you would have to, risk much, less pips in a sense. Does that make sense? Let me put it this way. If your stop loss is 15 pips, um, you may have to narrow it down maybe to half of that if you increase your lot size, because you might not be able, or you might not afford the loss of 15 pips using, let's say, moving from a lot size of, let's say, 0.05 to 0.20, right? The loss is totally different. Same amount of pips, but the loss in monetary value is totally different. So, for me, do I scalp? Yes, sure. It's all about scale and scope. There are times in the market where we don't have clear sense of direction, and we are not patient enough to sit on our hands as we should. And so therefore we'll play those tactics. We'll look at the lower time frames and engage the market, right? But of course, the risk exposure becomes greater. So yes, a lot of traders do love, scalping. But if you've noticed with yourself, you in most cases, those accounts get blown. Those accounts get blown, right? Now, for me, sure, I scalp. There are times where it's usually month end when we get a bit of increased volatility, where there tends to be profit taking. I'm scalping, and I'll tell you why I scalp. I'll scalp. How can I put it so I don't lose you? Okay, say I've been, my this particular trade has been a sell for the entire month, right? Now, come month end, uh, we're gonna have profit taking, right? So profit taking, that means those who have been selling for the entire month will like to consolidate those positions. They're going to definitely, close off some of those sell positions and then opening them up at a later stage. And at a later stage, time is relative. It could be the following day, it could be a few days after that. So whenever we lose momentum to the downside, who's taking over? It's bulls. You follow? So
Yes.
there's going to be a corrective buy. That's not the trend. It's just a corrective buy as those sellers are taking profit month end. So we will then take advantage of that. Or personally, that's what I would do, right? I will then look for those buy opportunities to the upside, just target the short-term buys as the market looks for fair value, as those bulls look for fair value in the market to continue what they've been doing for the entire month. Does that make sense?
Yes.
So that's what would inform my scalping, right? That's one of the reasons. Another reason, like I said, if the market maybe is rather very choppy, thing we are not getting clear sense of direction for whatever reason. There's always a reason for that. But for whatever reason, it's not clear, then we'll go to lower time frames and engage it. You've got that option. And another option that we should be using or taking is to sit on our hands and wait for a high probability setup. But we are human beings, as you know. We are impatient, we are impulsive, right? So 9 out of 10 times, I will opt definitely to swing. If I can swing, perfect. It makes sense to me because I didn't leave my formal employment years ago to create another job for myself, which I realized years into doing this thing that I've actually created another job for myself. So I'm held hostage by these charts. I can't move away. So with swinging, I'm able to, do my analysis, plan the trade, and trade the plan, right? And let the actual market do its thing. So I'm targeting a much wider range. Yeah, I can move away from the screen. It takes a bit of discipline and getting used to it anyway. At first, I'll tell you, it's not easy, especially if you don't have, how can I put it? If you feel like you don't have all the facts for entering into a particular trade, right? Now, all the facts are what we've been learning, all the macroeconomic data, all the fundamental data, basically, right? That's what gives you confidence and confirmation why you're in that particular trade. But before that, it would be very difficult for me to sleep with an open trade. I'll tell myself, okay, no, this trade is going okay. I've got a stop loss in place, so I'm gonna go sleep. But honestly, I wouldn't catch proper sleep. Right? This is where you even have nightmares of you blowing your account because you're just not used to it. You will wake up in the middle of the night and check your phone and check your chart. Is this trade still okay? So but over time, you learn to actually let the market do its thing. If there's only so much you can do. You can't control what's going to happen in the market. You're not stop fighting to being correct all the time. You're not. So if you lose the trade overnight, that's what it is. You've lost it. It's completely okay. The main thing is knowing and understanding exactly what that loss means in monetary value. That's something that shouldn't surprise you. You should know exactly if I'm risking 25 pips, this is the value of those 25 pips. It's something that you can stomach. You're not going to lose sleep over that loss, right? It's not devastating. So I love to swing. I love to day trade. Now, I don't intentionally, yes, my intention is, or rather, let's say, when I look at it, I'm ideally looking to swing the trade, but time is not necessarily a factor to me in a sense. I might be targeting let's say 150 pips, right, on a particular chart. Now, I have no idea when price is going to move from point A to, to point B to meet my target. That is, hard to say, right? So that trade can take some couple of hours to get to my TP. There might be a lot of momentum in the market. Great, fantastic. And sometimes that trade might take a couple of days, right? It can be 24 hours, 48 hours, 72 hours. Sometimes it'll even, really test you and go a little longer than that, right? It might go sideways, but you're in the trade and go sideways and okay, it can go sideways for the entire week. So what do? You get mentally fatigued. You start to think, I've been just seeing this floating P&L. I'm in profit. I'm out of profit. I'm in profit. So you get mentally fatigued, and you say, so the smallest profit that you see, then you take and you say, I'm out of this trade. And you know how it works. As soon as you leave the trade, what happens? It goes in your favor, right? So it's just how the market works. So I'm not putting time to my targets. I'm simply letting the market do what it needs to do. I'm focused on price. So if it means that the trade goes sideways for days on end and I'm not I haven't realized my TP, then that's what it is. It's okay. As long as I am not stopped out, I have no reason to leave the trade. Simply put. So I love swinging for another fact why I love swinging is because I can it gives me time to do other things, right? It gives me time to do these sessions with you. It gives me time to go and be out there on the sports field, watch these kids play, and whatever, but definitely not be on the SG. But hey, that student governing board thing, hey, I'm okay with it. That's one thing I want to. I've tried it now, but it gives me time to actually be present because I've been told one or two times that I am here, I'm in the house, but I'm not actually present. So swinging makes me present, right? So I think it makes sense for anybody because for me, trading is just yet another vehicle, like I said, or income stream, right? So honestly, we've got, passions that we want to pursue out there, be it whatever, you're a painter, whatever it may be. So you want to do those things with the time that trading affords you. That's the whole point of it. So yeah, I hope I've done justice to that question. Right.
Yes.
Yes.
Yeah.
Was it Medino?
Yeah.
Mhm.
Yes. Some people I've heard in the previous trainings that I've been to where they say you must be careful with overnight or weekend plays that you live on in case there are some news that just rock
Mm.
your trade. But then I suppose if it's a loss, then you have your stop loss, I guess. It
Yeah.
doesn't really make much difference, I guess.
Exactly. Now, a lot of things can happen overnight, right?
Yeah.
A lot of things can happen during ungodly hours, as my mother would call them. Anytime between what is it, 2 and 4 p.m., 4 a.m. Anytime between 2 and 4 a.m. She used to call those ungodly hours. She would say when we used to party back then, don't come back. You'd rather stay where you are. Galavanting ungodly hours. So yeah, of course, anything can happen in the markets, of course. And we know New Zealand is in New Zealand. Usually it's during the Asian market you'll get wee hours of the morning Australian economic data, Japan's economic data, and I think Chinese as well, right? So yeah, these are equally developed economies, and yeah, sure, their data could move the market. So, but if you've got a stop loss, like you say, well, you've already priced in that possible loss. Definitely, you've already priced it in, right? Over the weekend, well, I try not to really have trades running over the weekend. Yeah, but sometimes I will. For example, the gold trade. I was 50-50. Do I close it literally at the last minute of the Friday? I thought about, do I close it? Do I let it run? I figured no, let's let this trade run, and hopefully there won't be any major geopolitical event, such as an escalation in the Middle East that might cause some sort of gapping. But I thought, I'll tell you what the thought process behind it. I thought, well, I'm in a buy position on this one. So if there's anything that's going to happen, it should positively impact. This is my hopeful or wishful thinking as I left this trade open, that, well, if there's anything that should happen, it should positively impact gold, right? Because, well, we know that if there's an escalation of the war, gold won't collapse. Gold will only go up. It will gap to the upside. Yeah. You get the thought process. You see how I was connecting the dots there?
Yeah.
Right? Because remember, we said gold definitely is a preferred commodity under any uncertainty brought about by geopolitical events or whatever it may be. Gold will be another option. If we're not going for those bonds, we're definitely allocating to gold. Righty. Yeah. Keep them coming. Keep them coming. I think we are fresh.
I do have a question.
Yeah. Yes, please go ahead, man.
Yeah. Like on Friday, we had like after your whatever your trade plan that we embarked on, I realized something, and I'm trying to understand what creates that difference. When you have a GBP USD trade going and the gold was moving quite fast, but the GB was like walking, strolling to nowhere.
Yeah,
kind of.
100%.
What creates that? Yeah.
I honestly wouldn't have the answer right now. I don't think we had any scheduled economic data for the US and for the UK. No. Could we have had something for the UK? Let's see. Let's look at the calendar. What's going on with my mouse? Okay, let's look at the economic calendar and see if there was anything scheduled. But as far as my memory serves me, no. And so I don't have an intelligent answer for you on that one. Why the loss of liquidity or momentum on GU? And, we see that momentum only on gold. Hard to say at this moment. But as usual, anyway, I will find the answer one way or the other. Let's see. I'm on the wrong thing here. Let's see. I did see, definitely, I saw that we definitely went sideways. And I think up until actually today, that's where we start to see this GU now actually gain some bullish momentum. Okay, so Tuesday today, let's go back to at least Thursday. No, Thursday. Let's look at Friday in particular. Okay, Friday, we had GDP month on month. Previous, it was flat, came out actually good. So that would have been positive for actually the pound, actually moving our trade plan to the upside in our favor. That was what happened first thing in the morning on Friday. But I didn't see much movement on that. Is there anything else scheduled for the US? And that was the most, of course, market moving thing, GDP. US, what did we have? Oh, yes. We had core PPI. Core PPI, remember we mentioned it in one of our measures of inflation. So I forgot to mention this actually on Thursday. We didn't actually look into the economic calendar on Thursday. So that's what we got. core PPI. What is core PPI? Anybody?
It's producer purchasing index.
Producer purchasing index, right? So that, well, the core anyway, did decline a bit from 0.3 to 0.2. Remember, we did say core is quite important. That's what the Fed would consider as they look at the data. And then we had headline PPI. That too moved from 0.2 to 0.0. So I would say overall, inflation in terms of this type of measure was to the downside. Let's see if there's anything else. No, nothing really serious, honestly. Nothing really serious, honestly. Right? Now, of course, we said if inflation goes down, that will negatively impact, of course, the dollar. I think that one we've gone through it quite a couple of times. So we actually have this data that was very much within our favor, but it didn't really do much. So it seems like the markets wasn't really interested in it. I don't know. I really don't have a solid answer on this, but I mean, we've got the data out of the US that suggests the dollar should sell. And we've looked at the dollar index. We are at a key resistance level, a multi-year level of resistance. Remember that? Let's quickly look at that. DXY. And then we also have the pound, which was meant to be positively. Yeah, nothing. If anything, we went sideways on that one. But I just want to go back to this dollar index chart so that actually, I won't even say it, right? So let's go to the daily or 4-hourly chart actually. Hopefully, you can see we've been playing since at one point and back, but also, of course, also 2016. So it's not a level that dig in just a little deeper before we actually definitely see those dollar bears come into play. So this GBP USD trade of ours is still very much valid. Yes, there was a loss of momentum. Had to pin it on a particular event or economic data, but still very much makes sense. Does that make sense? It's still very much a valid plan that we should definitely entertain.
So we are hoping to continue to buy for the GU.
GU, yes, that's our GU plan. We did this one last Thursday. Still very much okay, right? It's okay. We've got this trade plan. We know it might dig a little deeper to come and test this trend line support. Talking at length about the fundamentals to back up this one, right? One, of course, just being, of course, the monetary policy and seasonality as well, right? We've got the Fed cutting interest rates. We have a seasonality also that we are trying to, take advantage of. The last quarter of the year tends to be definitely risk on, right? So GBP, USD, Euro USD, those tend to be buys, including, of course, our gold. XAU USD, let's quickly check that one out. I think it's this one. Or not. Where did I do that trade plan? Okay, let's check the next one. And remember initially, we were looking for that 2600 retest. Remember? 2600, right? This is 2600. 2599, run about there, 2600. Okay, violation didn't have a significant retest. We were expecting it to dig into it, but the best it gave us was 2603, right? So after seeing this impulsive previously resistance, that's when I realized, okay, I think it has done enough. Role reversal is not really going to dig into a particular level, which is to definitely, catch this train before it leaves without us. And that's why I actually shared that trade plan. So I just drew a simple trend line to, highlight the fact that we've been bearish and we violated it, right? role reversal. Gold as well, yeah, sure. It was moving by quite a bit in terms of momentum, but also really not going anywhere slowly if you think about it or you look at it, right? So we've got Friday to the upside, but Monday we come back to momentum again. So we are in it to win it, right? And we said, of course, the target is the all-time high on this one.
Yes,
So
but
the market will definitely reach that
I
high.
beg your pardon?
Definitely the market will reach to that high there, that 2683.
Is that a question?
Yeah, I'm asking.
Oh no, nobody knows. We don't have that crystal ball, unfortunately. So you see, the problem when you say definitely, you're emotionally attached to the plan. And when it doesn't work out, you are still blinded by the fact that you said or you're expecting it to get there. So you can't, the house is burning, but you're not moving, you know, you're not exiting, you're not taking the nearest exit. Right? So no, everything is probabilities when it comes to the market. Probabilities. We don't want to involve those emotions because we expect it. It's a higher probability that it's going to get there, especially if we have, you know, a fundamental catalyst, right? So as long as this war continues, as long as we are risk on, as long as you know the Fed continues to sound dovish and cut interest rates even further, of course, we've got all these things in our favor to expect a continuation and likely a break beyond 2683. But it is just that it's a probability. Something might happen that's quite drastic setup that we have, right? Hopefully that makes sense, right? So I mean, already the target on gold, and this is the target that we've had since 2018-19, is 3,000. It is 3,000, right? So some of us, like I said, when you do so as well, please don't keep these things in the house. When you go buy your Krugerrands, actual those gold coins, yeah, don't keep them in the house. But you can imagine when we bought, you know, more of these in 2018, and like Medino, who also owns gold shares as well. This thing is just, you know, yielding very, very beautiful returns, right? This is something that now you're doing long term, right? You can even hold on to this thing for the next 10 years. Gold definitely won't be any less than what you've bought it for as an investment, right? Remember, I said, I don't want to always just about the trading side of things, but also long term, because the trading side of things, the risk exposure is much greater, right? The earnings, yes, you can realize them in the short term, but investing, the risk is slightly less. And, you know, yeah, I don't know what more else I should say on that. But yeah, it's never late, I can put it that way, to have some sort of an investment on gold, be it physical gold or gold shares, CFDs, basically, etc. Right? Of course, when you buy physical gold, buy it at a reputable, place. Not this somebody saying to you, "Hey man, I've got a friend who owns a mine in Ghana somewhere." Hey, no, 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 no. You're gonna buy the wrong thing, right? Just go through the right channels. Your bank will likely tell you exactly where to go, right? For that. Okay. Any other question?
Okay, maybe just to
Yes.
maybe I want to ask for now the gold now how it, currently it is pullback. I think it is having a little bit of pullback. Maybe
A little bit of a point is the zone a bit coming in. Of course,
Yeah.
when you catch a moving train, you might lose your limbs, right? But for those who want to compound or maybe buy, of course, your risk appetite. But I'm always looking for a risk reward ratio of no less than 3, 1 for 3, right? I think we can do it this way. So we're gonna look at we had an impulse.
buy there.
We wanna make sure that we have the impulsive move. As you know, we will use Fibonacci. Fibonacci from there to there. to establish how much of a pullback. 0.38, just up to this point. So golden ratio is basically between 0.5 and 0.61, right? Anything below that, then we kind of back into, I would say, bearish territory. We might go all the way back to go and test our support. This stop loss, I think, really does make sense. It's fine. It's below. We've given ourselves enough room for it to come into the zone and then push higher. Should it push a little lower, right? Squeezing out some of the bulls, retail traders, right? So current price 26.60. You can compound or into the trade. Your stop loss will be at 26.53. Entry 26.60, stop loss 26.53. If you use the right.
So currently, what about the issue currently of the fundamentals now for the confirmation? Or there's no news about the gold?
I beg your pardon?
What about, I'm asking, to get more confirmation about the fundamentals now for the gold and US dollar currently now. Is there any news which will make it is going to support to go there to direct to 60 to 26.63?
Okay.
Any current news? Yeah.
Currently,
Support.
we have, the war taking place, right? That is one big geopolitical event, right? The whole world is looking at that. We've got the Middle East war, right? That keeps these prices elevated. We also have, of course, in terms of monetary policy, we've got the dollar, right? Which is dovish. They are cutting interest rates. When they cut interest rates, that devalues the value of the currency, right? In this instance, the value of the dollar. So we are at a key level of resistance, right, on the dollar index, and we expect that to, continue moving to the downside. So those are the two major fundamentals, I would say, would back up this, right? So we've gone through the London session and the New York, which is almost done. Now, what you will see with the New York session, well, rather with the Asian session, if you've had, what's today? I've been quite bullish with this one. Where's my pencil? Where's my pencil? Which I think anyway has taken place. So we've had a push to the upside for the day between the London and the New York session. So normally what you would have in the Asian session is a bit of a correction, but the correction is kind of taking place. We are at a key level of support. So we might bounce sideways or we might dig in a little deeper. Hard to say. Right? Hard to say. The main thing is, as long as we are within that major level of support, we will entertain those buys. So that's exactly where we are. And like I always say, guys, logic will always, dictate your entry as well, based on that simple understanding. If this is resistance and it's violated, role reversal, right? Who was here? Bears were here. Who is here now? Bulls are here. Bulls are always looking to buy low. Bears will be here looking to sell. Right? And so therefore, that's why we always say, you don't want to be buying here. You can buy there, sure, but then understand the risk exposure. You are what we call an aggressive bull, right? Those who would trade maybe those breakout strategies. Now, I don't particularly subscribe to that type of trading. It's not it just doesn't align with my risk appetite. I want to see a violation, a retest, and that's why I'm quite comfortable to give you that. I will never lead you astray, right? But doesn't mean that it's a prophecy is going to play out exactly like that. I'm not unfortunately in the Bible. Right? I'm not. But based, this is a.
That means,
yeah.
Okay, maybe until a certain major economic news, which will happen maybe starting from Wednesday up to Friday, maybe which will be bad, will make the gold to sell now going down. If that news will happen.
100%. There may be news, scheduled or unscheduled, that could turn this whole setup upside down. And we adjust to it. It's not a problem at all. Right? We are always adaptive. We are flexible enough to adapt to the changes. That's why I was cautioning you earlier that there must be a change in your vocabulary, right? Must, unfortunately, will lead you astray, right? Should, must, nah. It's a rather big emotional attachment to a trade plan, right? Remember last week or the week before, guys, I said it only takes you to watch Bloomberg to have 3 or 4 very experienced, hedge fund managers, asset managers being asked the same or very similar questions, but their answers are not the same. Their point of view about the market is not the same. Right? So somebody out there is going to lose money. Somebody must lose money because somebody's going to get it wrong. Right? So I want you to be comfortable in making an analysis and making a decision and being comfortable with the decision that you've taken. Because you can't control whether you're going to be correct or not. You're working, we all have access to the same data, but our interpretation of the data varies. Right?
It's different.
I think you've seen that study where they show you a coat and they say, is this coat blue or black? And everybody's like, oh, it's blue. And others are saying it's black. And I'm like, you've seen that, right? We're looking at the same thing. But some are saying it's black and some are saying it's blue. Right? So it's just merely interpretation of data. All you want to do is to be comfortable with the decision that you make. Interpret the data, find alignment with what you've interpreted in terms of data and fundamentals, and find that correlation on the chart, on the actual chart, then go for it. If it's wrong, it's okay. Move on to the next thing. Right? Okay. So that is our trade plan for gold. Right. That's our trade plan for gold. There is one. Nasdaq. Although I did not share an updated trade plan on this one, I saw a rather major sell-off on Nasdaq, and there have been yet. No, we're not. We still have some room where we want to go, but then something fishy is going on here. So remember, that was the initial test. Then we'll entertain. We've had some sort of liquidity grab must have taken place. So I saw this just minutes before starting the session. So I quickly looked into Trading Economics. Remember, I said earnings season, but I can't see anything. There's nothing that came out which was negative today, right? All the companies that were reporting on their earnings are pretty actually good. They're in the green. So there must be something else, but I'll find out what it is. So let's move on. I did say I want us to continue with those monetary policy reports. Talk about, of course, remember I said we finished off looking at the personal savings rate and the credit card delinquency rate, remember? Which was some of the data that the Fed was looking at, which is something that was part of their decision making for cutting those interest rates. But I said that was not the only thing also that they're looking at. I mentioned the difference between the 2-year and the 10-year bonds, the bond yields. Remember that? And I said we have to look into that as well. But before we do that, we spoke briefly about oil prices, and we said if this war continues, what happens to oil prices? Oil prices. What happens to oil prices if this war continues? Anybody?
Yes.
Remember, think about it.
Goes up.
Oil prices are going up, but are they going up? Are they going up?
They are not.
Because that war is happening in a very simple, of course, continue. But if anything, to be having that impact, why? 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 What's keeping these oil prices subdued? Who is the second largest economy in the world? Who is the second largest economy in the world? There are too many people in the back of the class today. Let me call them out. And you know, with the exception of Bruno. Bruno, I know he's at work. Azania, my sister. Asare, Sitle. Who else?
I'm here.
I'm here.
Are you okay? Shall we
I have
hold?
information overload, guys. Sorry.
Hmm? What's that?
I'm saying that I was catching up on the previous trainings from September, so I'm like brain dead a little,
Oh, yeah.
but
Over the weekend.
I'm listening.
Okay.
No, I'm from Sunday. Mhm.
Oh, no, fair enough.
But I'm there in spirit and in ears.
Oh. Yeah, here in spirit. No, that's good enough. It's good enough. Okay, guys. So, who is the largest economy? Or, yeah, let's say who's the largest economy and who's the second largest economy in the world?
It's US and China. US
Yes.
comes first. then China.
Then second is China.
Right? Yeah, I thought you said Burkina Faso.
Yeah.
It's the US and China, right? China being the second largest economy, right? They are arguably the largest or the second largest consumer of oil. Now, that economy, as I've said before, is really struggling, right?
Yeah.
A couple of weeks ago, they initiated an expansionary plan of some sort, you know, the Bank of China was meant to be very dovish and actually buy a lot of government bonds, just basically pump money into the economy, but you know, especially into the real estate sector, which is pretty much on the brink of collapse, and other sectors, of course, the manufacturing, etc. You know, just to resuscitate the economy. But then there hasn't been a what's the word, man, that I'm looking for? You see, my English bundles have run out now. Yeah, Jesus, it's gone. A commitment, yes, a commitment by the Bank of Japan to continue with that program. They're rather wishy-washy about it, not giving clear signals about what they're going to do, right? Initially, it was quite clear they're going to do this, and they did the first round of, you know, buying those government bonds, you know, those treasury bonds, and now, no, they're not forthcoming with the information, and, you know, they're not showing much willingness to continue with that. So this has spooked a lot of, you know, markets and basically the you know, global, you know, investors out there saying, okay. So now you can imagine that optimism about seeing the China's economy going back to those pre-pandemic output levels are dying out, right? And with China being the first or the second largest consumer of oil, not getting back to where it needs to be and actually consuming as much as they should be or what they are used to consuming, the price of oil stays subdued regardless of this war. Is this making sense? Right? If
Price of oil, pardon?
Yeah. If you have,
You said China, the last statement there.
what about China?
The last statement that if China continues to what, I did not get you there.
Okay, if
Then
China doesn't get back to those pre-COVID pandemic levels, right? I'm talking in terms of output, in terms of their economy getting back to where it was before the pandemic, then oil prices will remain subdued because we have one of the big players who normally would contribute to the price of oil going up by consuming it is not consuming as much as they used to. Remember, demand supply, right? The more something is in demand, the more the price goes up.
Yeah.
So now we've got one of the biggest consumers, demanders, who's not taking up as much as they are, as we are used to seeing them take up, rather. Right? So let's say they would use 100,000 barrels of oil. Now they're not using 100,000 barrels of oil because the economy is not that great. Maybe they're using, let's say, 70,000 instead of 100,000. They're only using 70,000. So we've got an oversupply, in other words. We have an oversupply of oil. And it's like being in a shop. If you're a shop owner and you are used to stocking 30 white bread every morning, and Lebu who takes up, I don't know, maybe I buy half of that bread for some odd reason. Maybe I've got a sandwich store, so I will buy half of that, and then all of a sudden I don't. It becomes a problem for this one who has just stocked it. So we'll have to put it on sale maybe, or else it's going to go bad. Right? So the price of that bread is going to go down because he has to get rid of it. Hey, I don't know if that was a bad example or what. Anybody?
Yeah, I somehow get you. So when did that news being released that China won't continue to buy the oil as how you explained there?
That's right. They're not buying as much as we are used to seeing them buy. So we've got an oversupply, right? We've got an oversupply. So if you have more of something and less demand, the prices go down. If you have less of something, but the demand is up, the price of that goes up.
That's why I've asked that when did that news been released as you came to understanding that China are not going much interested in buying more oil, which has made maybe to the oil to drop.
What's the question, Jay?
Yeah, I'm asking a question. Because I'm trying to correlate with the chart here, maybe what you're explaining.
So, or are you asking? I'm not following exactly. Are you asking where do you get the data?
Yeah. When?
Oh, when? Okay,
yes.
guys. Remember I said for headlines, trading economics, those headlines will be there on the developments happening in China. There's a lot. So all the websites that I've shared with you, remember, I've tagged them under the Telegram group, right? Under websites. You'll see the ones that I say these are for news, these are for research, right? So we've got, let's say, Bloomberg, right? You're gonna definitely find news regarding China's economy. These are the headlines that you want to read. They are going to have economic data as well, which you're going to find under Trading Economics or Forex Factory or FX Street. All those websites, I've got them there for you. These are things that you look at or websites that you want to frequent. They're not always going to be sorry, guys, just give me a second. I just need to open for somebody there, right? Sorry. Sorry about that. Right? Where was I? So yes, these are websites. One of the things that you do, remember your checklist, you want to go through the headlines, know and understand what's scheduled in terms of your economic calendar that could potentially move the markets, right? So all those websites you would find definitely such information or headlines or news regarding any country's, I guess, economy, right? So there's the Chinese economy has been making headlines for the longest. They always make headlines anyway. So remember, this is the second largest economy. So you don't want to not keep track of that economy's developments, right? Because remember, I said who let's say, I mean, everybody globally, all our economies are linked one way or the other. So it doesn't happen in isolation. What happens in China doesn't happen in isolation, right? Especially for economies such as Australia, right? Why Australia? I've shared this information before. Why Australia? Why would China's economy negatively affect Australia's economy?
Because of they buy, what do they buy? They were biggest importer of iron ore.
100%, right? Australia is one of the largest players, miner, and exporter of iron ore, and their largest trading partner is China, right? So if China is now saying, "Oh, you know what? These are bad times. I can't take up as much as I used to from you, buddy." Of course, it hurts. It hurts you as Australia as well. Are you seeing the picture, guys?
Yeah.
Yeah, sure.
Right? It's like, being a sales rep and you have this one big client of yours who this one, I know, and this is what they order every month. If this client decides, you know what, we've just signed another deal with somebody else. Oh, you're screwed. There goes your money. It hurts definitely the earnings of that company that you work for, right? And that's why you don't want to have or rely on one big client as a company, or I guess as anybody, right? So yeah.
I think it's
yeah.
something similar level.
Mhm.
It's something similar to what's happening now with the German cars as opposed to Chinese cars.
Oh yes.
German is now suffering because people are buying their Havals and
Yeah. Why not? I'm thinking
Why
of
not?
replacing the I'm thinking of replacing the Hyundai with the Haval. I've been looking at them, driven them. I'm like, no, the Chinese are here and they're here to stay. So
Yeah.
so why not? That's what it is. You're right. That's exactly what it is. Right? Well, that's a good example, by the way. So, yeah. Okay. So I just want yeah.
Mr. Lebo, so that news of China, the issue of oil, maybe can you relate now to the chart here? I'm asking for the impact to the chart after China saying that maybe they're not going to consume the oil as they're used to. How has it affected to the chart? Maybe how can you take advantage of that information in the chart so that maybe you're gonna trade and make some profit from that information?
Remember what I said earlier as I started to mention oil prices, and I mentioned the Middle East war, and then I mentioned China. I said, yes, we've got the Middle East war that's supposed to, elevate prices of oil, because, well, that's an oil producing region. Fine. But now we're not seeing oil prices going up. So we came to China, and this is where we understand, right? Now, China didn't come out and say, we are not going to consume X amount of oil, right? No. But remember I mentioned that initially they announced a program, right? The Bank of China announced a program, right? Which is very expansionary, right? And with that in mind, this is meant to accelerate the aggregate demand for goods and services in China. It's meant to, speed up that economic wheel of China, get it back to where it used to be. So initially, in the last couple of weeks, yeah, the optimism was there. And now we're seeing a lack of commitment based on these articles, right? And this is something that when you read and it comes out at that particular time, you can't necessarily run to the chat and say, okay, I'm going to click on cells just by reading this chat, just by reading this article, right? You have to go and look at the chat and say, where are we on the chart? It needs to make sense. Let me put it that way. That's where you understand the fundamentals and you know how this particular information can affect a chart. So on your chart, you can't go in and click a cell, but we have a series of higher highs, right? You have to determine key turning points in the market where you can then engage that data, right? So in other words, if this was a bullish chart, let me see, let me mark out this high, maybe it might make sense. Yeah, it does make sense. The information that you just got in a hold of and you've read and you've understood how much it brings uncertainty to China's future in terms of the economy. Maybe I don't want technical, so it would make sense to engage a sell at this point. And now, fine, I'm giving you this data or this information, right? And it's not current. It's not a minute old. It's a day or two old. But the market is likely still going to continue to price it in. So where would you then want to sell? Do you want port? Would you want to sell here maybe? Anybody?
Yeah, because it is
Exactly.
resistance.
Exactly. So you've just learned about key crucial information, but you can't act on it now. So you explore support. So what I would want to do as a trader, let me see if we can get into the zone. This thing's a little slow. Let me get into here and then get it. And you're saying, well, we've been in this, we are back within this channel. So I might sell here actually, okay, before selling. So if your sell, let's say if your sell trade or entry is at this particular point, then your stop loss should be above this shaded blue area before turning. So your stop loss should be somewhere up here. Hell, as a matter of fact, price might play tricks on you. Remember, guys, so that's the first scenario. Fine. We might sell here. We might sell as it digs in a little deeper, right? It might not even come to this point, or it might even go it might correct even further. It might just actually go over here. It might say, hey, hang on, I'm going to go back here and then sell. So squeezing out all the sellers, all the retail traders. I say, when normally, the other thing that is a challenge to traders is that because they've got the fundamental backing, they want to go crazy and put all chips in and say, I know this is what's going to happen. Yeah, you're right. We're expecting a continuation to the downside. We've got the fundamentals to back it up, but you have to make calculated risks, right? You have to make calculated, because now you can imagine, and these are things that have blown many accounts, including mine, where I say, I understand the data, so I'm going to go big. As soon as it touches here, I go big on it, and then it goes, and then it goes, and then it comes down. Now I'm frustrated. Right? This is where when your wife is up for you, you don't put the food, you're acting like you're in some sort of extramarital affair, you're acting fine. You're behaving fine. You can't tell her that, hey, listen, man, ish, the accounts have got me by ish. They put me on. So you get the point. So it's all calculated risk. We've got the fundamentals, right? You can go look at those headlines and you say, oh, okay, so this could possibly continue to depreciate the value of oil. But then it's 50-50. If there was no war, right, if there was no war, then we are only faced with one thing, just China's, struggle, economic struggle. Then we know, okay, we're just simply playing the cells. We're simply playing the cells on oil. But then we've got the war as well.
Yeah.
We can't ignore it.
Yeah.
China's not.
And today,
Yeah.
today I saw on Bloomberg that the oil is actually going down because Israel decided not to bomb the Iran, nuclear
Right.
energy.
They said not to.
They
Israel
decided
decided not to bomb, right?
bomb the energy, whatever nuclear energy plants or I don't know, whatever energy.
Israel decided not to bomb Iran's nuclear energy plant.
Yes,
Yeah,
yes.
I saw those
So
developments.
that's why they were saying Bloomberg, the oil went down
Right.
because
So there are many moving parts to this, right? So we've got that. So there's a cooling off of some sort on that front, and then we've got also China's situation here. So all this feeds into oil prices, being subdued. But should they say tomorrow we wake up to them saying, headlines are saying, Israel has decided to really attack Iran. Then we might see a knee-jerk reaction in the market. We might see those oil prices, push a little higher because, of course, it's a concern. This is the Middle East we're talking about. This is an oil-producing region. It plays a significant role in the global economy, right? And as a matter of fact, one of the other things that I saw last week, they were actually, it was Israel actually showing all the major pipelines by Iran, their oil pipelines, saying, hey, you know what, if you want, we could actually just go for their pipelines because that's their source of money. Wouldn't you panic as somebody who's a oil investor or a oil trader looking at this particular chart? Or heck, even if you're not a trader, but somebody who does a lot of international business, you're moving goods around the world, the cost of those shipments is going to skyrocket because of oil prices going up. Remember, diesel is a derivative of oil. So it doesn't affect only just traders, it affects everybody in the world. And if oil prices go up, inflation goes up. So of course, everybody's concerned about what's going on in the Middle East, right? So that is something that could bring about a continuation to the upside on oil prices. But for as long as nothing major takes place in the next coming days, 2 weeks out of the Middle East, we are likely to see oil prices come down. Does that make sense?
Yeah.
Yeah. To me, I was just asking the question from what the issue of Israel, they decided not to bomb Iran. How does it relate now to the oil prices to decrease? How the relation there?
Let me leave it to one of my students.
Maybe,
yeah. Let's see.
Okay.
Israel decided not to bomb Iran. How does that affect oil prices?
My understanding is that Iran is one of the main producers of oil. And if their plants are bombed, it's gonna affect the production of oil.
And the supply.
And therefore the supply, the demand and supply issue. We all get affected, we will be affected by that. So when they decide not to bomb, then the price of oil goes down because there is no issue of a demand and supply. That's the way I understand it.
100%, right? Because if they bomb Iran and they affect their production and supply of oil, then prices, this is now the supply, prices will go up.
Skyrocket, yeah.
It will skyrocket. because, well, yes, they're not the only producers of oil, but then they've disrupted the whole supply chain. Prices will definitely go up because somebody who's been taking care of X amount of supply is no longer doing so. It's demand and supply, basic economics, right? So oil
So okay,
prices,
now I get.
as long as they don't bomb them, oil prices will go down.
But they won't stay the same.
They never stay the same, right? All prices never stay the same. In fact, nothing stays the same, right? For example, let's talk about 2020 when oil prices collapsed. They went below zero. Oil prices went below zero. Why? Nobody was bombed, but we had COVID. So we had an oversupply of oil, right? Because no international trade was taking place. Everything was locked down. Nothing was going in or out of your country and other countries as well. The only thing, it was the basics of the basics. So international trade, literally all those ships, there are maps that you can look at, there are radars that you can find online if you were to Google, if you want to, keep track of ships or you want to keep track of flights, you would see that on the map, it's quiet. No flights, no ships, nothing was going in and out. So nobody's buying oil. So oil prices, what do? They collapsed below zero because the demand just vanished literally over a period of a couple of days to weeks.
So it means if you could get that information before, you could just sell oil very early. You could have made a lot of money because you knew nothing is happening.
Was this funny, Kevin? Was this funny, Kevin? Yeah, you're right. You're 100% right. No, if that's what we call, it's information, right? It's information. You're 100% right. It's information. And it's not like the information is hidden. No. I mean, I think it was something that one thought about back in 2020, but I honestly underestimated the severity of this COVID pandemic. I never thought the entire world was just going to shut down like that, right? And so things developed rather very quickly. I was like, oh, shucks, okay. So this is really this is a movie. We've seen movies like that. Right? So yeah, we could have, if you had that inclination, yeah, you could have definitely, sold oil and continue to hold that position up until the rollout of the vaccine, which basically meant the reopening of economies. Yeah, sure. There's a lot, I guess, out there who took advantage of that on oil. 100%. Yeah, no, we unfortunately I won't do what you call this today. I won't do the monetary policy reports for the sake of time. And I don't want to go into the bonds as well. I don't want to rush through these things, but if anything, this was, I guess, a fantastic Q&A session. I want to, though, use this last 30 minutes to talk about QE, quantitative easing, which I mentioned and didn't quite mention it. Remember, we spoke about the other monetary policy tools, right? And I left out QE and I left out tapering, which for many, maybe it was the first time hearing tapering when we read that monetary policy report, July 2019, where they make mention of their balance sheet reduction, basically stopping the balance sheet reduction. Remember, I showed you the what you call this, the balance sheet. I showed you how it was declining and all of a sudden it started to pick up. If you don't remember, go through that recording. It was last week, Thursday. So I want to talk about QE, if anything, as a monetary policy tool. QE. But you know what? I would be doing this injustice because for me, or for you rather, to fully grasp this QE thing, we don't have a choice. We have to go here, at least up until October, right? Because I'm putting everything into context for you, so that won't work. I'll be taking shortcuts. It's just going to confuse you, right? Because for me to talk about QE, quantitative easing, and I mention these things so that for those who are proactive, they can go out there and start researching what is quantitative easing, even though I don't go deep into it today, right? But there's a difference between QE and what we're going to see happen between September, October, right? September, October, because the last report we read was in July. Was it July? Yeah, July. Remember, we read from January to July, and it was only in July where they start to cut interest rates, right? They make mention that their core inflation is below 2%. They cut interest rate from 2.5 to 2.25, right? And they make mention about uncertainties about the economic outlook, right? So as we go on to September and October, you see we have 4 unscheduled meetings. Something was developing out there. Something was unfolding in the US economy. And we really have to read these reports because there's a difference between QE, quantitative easing, and open market operations, also known as OMO, right? Open market operations. So a lot of traders confuse these two. So we have to read those reports. There's no way around it, but the time, it will keep us here at least for another hour. So I would hate to do that to you. So if anything, let me ask you, did you get a chance to read the September one? Because that was the assignment for the weekend. One person who read that definitely is Azania. She made mention that this is what put her in the situation where she's now only here in spirit. Did anybody read this report? You're disappointed. Of course, Kelvin just joined us today, guys. So I know. Of course, I don't expect that from you, Kelvin. But
Yeah,
everybody
sure.
else, you're disappointing me. You're disappointing me. I'm gonna give you this evening, right? This 30 minutes that is left. Rather read that report, right? Read that report. Because I'm gonna be breaking it down of September, October. I'm gonna break it down because after this, we go into basically what you call this 2020, where things really now start to unfold. But for us to get to 2020, you need to understand 2019. You will have actually understood monetary policy. And so with the changes that happen in 2020 will make sense, will really make sense, right? So are there any questions? I'm not going to talk about the bonds today. In other words, it's not necessarily even, okay, fine, it's bonds, but essentially we're making a comparison between the 2-year and the 10-year. There's a name for those particular, or for that particular comparison. So I'm not going to talk about that. Inflation expectation is a word that we've been reading about in all these reports. And I said, it's something that we need to tackle this week. So I'm going to skip that as well. I'm going to skip that as well. So feel free. Are there any questions? Let's wrap this up. But tomorrow we are getting straight into this monetary policy report. Any question?
Maybe let us look the Euro USD and see maybe what's
Euro
going on there.
USD. Okay.
Yeah, Euro
First things
USD.
first, let's look at the economic calendar and see what has happened, what is scheduled, and then we'll know when we look at.
So maybe to see if you can get any trades maybe from there.
Yeah, no worries, no worries. Today is the 15th, so let's go there.
Date is 15th.
Okay, let's see. Anything for the 15th? No. If anything, we had major inflation data for Canada. Canada. I just want to look at that data. Negative 0.2 to negative 0.4. That's headline inflation. That's down. Median. You know what? Some of these guys, there are many terms for the same thing. So it might be confusing. You're not seeing core anyway. You just have to simply click. They've got median and they've got trimmed. What is the difference? So let's see. Change in the median price of goods and services. Actually, okay, they don't really quite tell us what it is. Let's see. Goods and services. Okay. Changes in median goods and services and purchased by consumers. Okay, specifically consumers. Consumers price accounts of majority of overall inflation. Inflation is important, of course. Yeah, sure. All right, it's not really telling me what this median is. Let's see what common is. Changing the price of goods and services purchased by consumers, which have similar price variations over time. But they must show us the difference, though. They must show us the difference. I'll find it for you. Because one of these is definitely core, and if anything, I suspect medium could be core. Nevertheless, 2.3 that stayed, unchanged, so that's stable. The trimmed as well, 2.4. These are year-on-year that stayed unchanged as well. Common that went a little up, but as you can see, it's an orange folder. Medium impact. I would say that inflation is rather stable. So if anything, what I expect out of the Bank of Canada is to continue maybe cutting interest rates. Okay, let's look at tomorrow. Let's see if there's anything that could change the outlook on Euro USD. Euro USD.
Yeah, there's 2 p.m. there. There is main refinancing rate.
Yes, extremely important. What is main refinancing rate? Anybody? See, they'll give you the same thing, but different. They'll term it differently. Main refinancing rate. What are they talking about there? That's extremely important. This is very important, actually. As you can see,
monetary policy.
As you can see, it's followed by a monetary policy statement. That statement is basically Christine Lagarde will give it. She's the head. This is interest rates. Interest rates. You remember the Fed? The Fed also don't call it interest rate. They'll call it what? Fed funds rate. Fed funds rate.
Fed funds rate.
Right? These guys call it main refinancing rate. It's the same thing. We're talking about interest rates.
So in Euro, they're calling it main refinancing rate.
Main refinancing rate. The Fed calls it Fed funds rate. Right? We're talking about the same thing, interest rates, right? So there's an expectation or a forecast that that's going to come down from 3.65 to 3.4, right? Should we get the 3.4, what does it mean for the Euro USD? Or for the Euro? Never mind Euro USD. What does that mean for the Euro?
They're going to cut the rate going down. They're going to cut the rate down from 3.65 to 3.4.
Yeah, sure.
So it means they're cutting, they're reducing inflation, I think. One of the
No.
maybe.
Nope.
Not that way.
It's gonna be on a very short.
Come again? Who's that?
No,
Bruno?
it's me, Bruno. Yeah.
Yeah. If they cut those interest
Yes,
rates, what does that mean for the value of the euro?
It will weaken
yes,
the
yes.
euro.
It
Euro
will
is weakening
weaken.
the euro, then euro USD.
Exactly.
Yes.
It will weaken the euro currency. So euro USD, that would be a sell.
Yeah,
Right?
to do a sell.
Yeah, that would be a sell. Remember, when you hike interest rates, if we want to talk about inflation, if we are hiking interest rates, what are we doing? What do we want to achieve when it comes to inflation then? If we
To
hike
reduce inflation.
Exactly. We're trying to reduce inflation. When we hike interest rates, we're trying to reduce inflation, right? And doesn't necessarily mean when we lower inflation, we are trying to hike inflation. No, that is not the main purpose, right? It's just a byproduct of it. But what we are really what they're trying to achieve is economic growth, but it comes with the territory, it comes with inflation, right? The main thing is just maintaining inflation or keeping it within a certain range. So if they cut interest rates, that definitely would have a negative impact on the euro. So euro USD, I did this plan, if I remember well. Euro USD, I'm gonna switch screens. Let's look at where is my trading platform? Euro USD. Let me just switch. I did this with somebody on Friday morning. No, Friday evening. Sorry. Friday evening. We were looking at this Euro USD chart actually. But then we did make mention of the fact that we've got interest rates that might come out lower. But the plan was, where we were anyway, in terms of the chart. I hope those drawings are not gone. Shucks, those drawings are gone. Yeah, those drawings are gone, but it looks something like this. I'll show you. Hopefully I'm not wrong. Yeah, we were looking at this. It was exactly here on Friday. This is where we were. Now, of course, logically speaking, if your price is in here, what do you want to do?
Look for selling opportunities because we are at the resistance level, major resistance zone.
Price?
No. The bulls are there.
Bulls
Bulls are there.
Right?
Bulls are there. Waiting.
Right? Exactly. Bulls were there. This is exactly where we were on Friday. So I said, look at what's happened here in the past, right? This level is a key level. Can't ignore it. It has acted as resistance, a violation. Halala, retest, my favorite. It's gone up. We're back at that same point. As long as we are above this point, we are bulls. Right?
But price is below that zone.
No, we're talking about Friday, not
Friday. Okay.
Right? Bulls. So now, of course, those trades have been negated. Right? As you can see, there's a divergence. We've lost that correlation between GBP USD and Euro USD. GBP USD has moved sideways as now is moving up. But, the common denominator here is who? It's the dollar. So why wouldn't Euro USD move in the same manner or fashion? Are you following? But it's not. We have since broken that support. But I think you know why. Hey, what did I do? I think you know why. Why is that happening? Why did we break that support? Why did we break that support? We've just spoken about the facts. What's going on tomorrow?
Possibility of a rate cut.
Exactly. The possibility of an interest.
Next tomorrow, actually, not tomorrow. Tomorrow is 16th. I think that is on the 17th.
So what is the market doing? It's pricing in that possibility.
You're saying there's a big possibility of
price cut.
right?
in
The
in
possibility
US
of
dollar
interest rate. Let's go back
The
to
euro. The euro.
let's go back to it.
tomorrow.
Yes.
No, it's not tomorrow.
Is it
Next tomorrow.
Yes, tomorrow.
Next tomorrow.
Tomorrow.
Yes.
Tomorrow.
Let's look at it. Let's look at it. This is not my. I'm trying to get to that screen, but let's give it a second. Tomorrow is Wednesday. Yeah, that we saw that for the 16th. Yeah, tomorrow. What's going on with this thing? All right, this thing just decided to just freeze up on me now. But the market is pricing in that possibility of an interest rate cut.
Can we front run the move, or is too late?
If the price actually, I love it because you're understanding now. You know how to engage. You're asking the right questions. Can we front run the move, right? Because you can see that's what's happening right now. The market is pricing it in. They're front running it. They're front running that move. They're already selling in anticipation that the ECB, the European Central Bank, is going to cut rates. That's what they're pricing in.
So they're saying because the news that's going to come of the interest rate is going to be negative, maybe that's why people are starting to sell early, maybe.
Yeah, the smart money is already in the trade. They're already selling. Right? And so that's why normally sometimes what you'll see, it's just a pity that I can't share screens now. I don't know what's going on with this thing. Oh, there we go. What was I trying to do here? Oh, look at the calendar. And that's why
the issue of price cut, which I did not understand. That's why you're looking for it for tomorrow.
Yeah, remember we just looked at the calendar, right? And what we saw is tomorrow, 2 p.m. South African time, was it 2:15 South African time? We've got the ECB coming out with their interest rate.
Not tomorrow, it's Thursday.
Right? It's Thursday, but they're pricing it in, nevertheless. Right? They're pricing it in. So Thursday, 2:15 p.m. Here we go. They're pricing it in. There's a possibility that we're going to move from 3.65 to 3.40, 3.4. So the market already has broken a significant level of support. If they didn't believe that the ECB is going to cut interest rates, we would still be moving in the same fashion as GBP USD.
Yeah.
So that's why they also price led to broken this zone.
Exactly. That's why price has broken that support zone. Right?
Yeah.
So the question by made, was, can we front run the move? Yeah. Well, you can. All you have to do is look at your price action and look for that entry. Right? That's all we have to do. So let's do it this way.
So I'm asking that we have just looked on the one side of euro. What about the US dollar? Is there anything maybe which gonna counter trend what we are saying that euro is gonna sell?
Right. So sure, you can look at the calendar. Right. Let's see. What do we okay? Wednesday, sharp nothing there for the dollar. Thursday, we also have retail sales. Who's coming out first? Euro. Okay, the euro is 15 minutes before. Then we also have the US with their core retail sales, right? Core retail sales. Yeah, sure. Let's see what they have in store for us. Yeah, retail sales. Expecting them to stay unchanged. That's the call for the headline. Expecting them to push a little higher, right? This is unemployment claims. This comes out weekly, 258 to 241. We're expecting that to cool down, but we've seen that it's pushed up in the previous week. So fine, let's play the scenario again. So if we have this data coming out tomorrow, on Thursday, where it's actually 3.4, that definitely would be negative for the euro, right? This is data that is quite clear to understand. It is lower than the previous month, right? And it matches the forecast, right? So that's definitely a decline. And where we are going to see an overreaction in the market is where the the interest rate cut is even lower than the forecast, right? But I don't see that happen, right? Do we expect a interest rate cut? Yes, sure. Sharp. So let's say we get that at 3.4, that's negative for the euro. Sure, let's come back to this one. If it comes out unchanged, that's okay. That's a positive for the dollar. If this does move up as well, it's positive for the dollar. If unemployment claims, in other words, people who claim for unemployment checks have also
Listen.
declined, right?
Decline. This is good for dollar.
Exactly. That is also good for the dollar. So now we'll definitely, that's an easy trade, right? Because already Euro USD, we've broken that level of support. So this is where we're going to see a continuation of bears on the chart, right? Positive data for the dollar, negative data for the euro. Easy sell, Euro USD.
Yeah, it adds up nicely.
It adds up nicely, right? Does it always play out nicely? No. So but if you believe in that scenario, and which actually is in alignment with the technical picture that you have right now, if I can just get to it, where we've broken the support. So that aligns with that sell. So all you do is you go to the chart and you say, and you try and determine where your entry for that sell will be. Now, if this data comes out completely surprising, in other words, completely different from what paid in today, it's not a problem. All you do closer to the release of the data, hopefully, just get to the chart. I like talking when the chart is open. Okay, it won't work. Fine. Let's say we find that entry tonight, Euro USD, you find your entry, you sell, or you find it even tomorrow, right? During the London session, you find your entry for sell, and it works out, and you like to hold it overnight into Thursday, no problem. If you're in profit, you have no reason to leave the trade. But come 2:15 South African time, when we get the release of the interest rate decision by the ECB, you need to make sure that you have adjusted your stop loss to protect your profit.
Yeah.
Right?
Yeah.
Now,
Sure.
data comes out and it's in your favor. It's an easy trade. You're already in it. You're already front running the trade. So that you'll just see a big spike to the downside, propelling you into even bigger profits. No need to engage the chart trying to open more trades. This is where things go bad, right? You're already in a trade. No need to make it complicated. You're already in a trade. That's the beauty. You do a trade with the anticipation that this is how the data is going to come out and affect this particular chart. If it doesn't work out that way, it's okay. Actually get stopped out. You're not losing any capital. You're not losing any capital. You're already in profit. That's what you were protecting by putting a stop loss. So you get stopped out, you're in profit, you sit back. No need to try and do any other.
Maybe okay, yeah.
Is that clear?
I get you. Maybe just for understanding. Maybe what if the rate comes different? Maybe from there we need to make new decisions now, because maybe we are saying that it should be 3.4. Just with the case of understanding, what if maybe it shoots to 3.7, for example? So it means we need to make other new decision from there.
Yes.
Because
100%. This is where now we need to review our trade plan, and we have to definitely review it, do another analysis, and say, okay, what does this data mean, right? And how will it affect the chart? But what is the likelihood, guys, of the ECB hiking interest rates? What is the likelihood of the ECB hiking interest rates?
Virtually none.
Virtually.
We don't anticipate.
No, that would shake up the markets to the core, because then that means they don't know what type of monetary policy they want to implement. They usually would give us some sort of forward guidance, if they're going to change their monetary policy, right? And we know that they are cutting interest rates. That's the direction that they're in. If they decide not to cut interest rates,